It is this environment that the Chinese and the Russians and the Indians and the Saudis, they understand what we're doing, and they are using this suppression against us by standing for massive, massive, massive delivery. And we see that continuously. So this game ends, and it ends badly. And I don't know if it ends now or later, but it's to a point where, because the rest of the world is looking at commodities as being far more valuable than the paper currencies that purchase them, and they're using the exchanges and their delivery mechanism to reposition, it becomes very dangerous to hold short positions. What has happened with the price of gold? Price of gold and silver are managed by the commercial banks. And I mean, that's the truth of it. The commercial banks are the ones that control the price of gold. It's controlled on COMEX. That's ending because the big money across the globe understands this. The central banks have been using the Western suppression against us for a very long time. They know this. In fact, I've said before, the head of the Shanghai Gold Exchange says, when the real price of gold, when China is allowed to speak at the table, the real price of gold will be observed. They talk about the new grain exchange that they just developed, the BRICS grain exchange, and they say, we produce more grain and soft commodities than the West does, yet we have no control over its price. It's all controlled on COMEX. That will change with the new BRICS grain exchange. They understand that we have been controlling the paper price of all of these commodities for a very long time. The commercial banks, what they do is they suck in the speculation. They let the price run, and they will suck in all the managed money, and they'll absorb all of that buying pressure. But they have enough money where they are able to sell into a rising market. Very dangerous thing to do. Most people, when they short, think AMC and GameStop, they short a falling market and pile on, right? It's like, when you played tackle football with your buddies in elementary school, everyone would jump on, pile on, hog pile. Well, that's what normal people do when they sell short. The commercial banks have enough money and really unlimited amounts, and they do it in a collusive manner where they are able to absorb all of the buying pressure, let the price rise, and then start to sell and overwhelm the buying pressure and drive the price down. As they drive the price down, all of those longs and all of the options expire worthless, and you get all of the managed money that end up jumping ship. These hedge funds do not have a high pain tolerance. So as the price starts to go against them, they jump ship. When the longs sell their longs and cover their shorts, in other words, they are getting out of their short position, they're selling their longs. The opposite side is the commercial banks. They're taking those longs and they're going long. So in other words, one of these days, and I believe we're getting much, 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 much closer to it, the commercial banks, and maybe this is the time, who knows, will flip-flop, and they won't short a rising market. They will push all of the managed money to the other side of the table, as right now they're in the process of moving to that side of the table, and they won't let the price, they will not let the managed money back into it. In other words, the managed money will go short. Right now, when the managed money sells their longs and buys shorts, the commercials are taking the other side, and that's what has happened. So the commercials drive the price down, they cover their shorts on the way down, they take the long positions and take the opposite side of the managed money short position, so they're net long. And the question is, will they this time let it run or not? As it goes higher and higher and higher and higher, and the managed money then flip-flops and goes into the other side, will they short the rising market? That is the question. And I think it's very difficult for these banks to consider shorting a rising market in this environment when the rest of the world is standing for delivery. But the reason the price fell has nothing to do with anything other than the fact that the commercial banks clobbered it. Literally clobbered it and got almost $5 billion in gold futures sold and $2 billion in silver futures sold in a week. And that is having, as usual, a profound effect on the price of gold and silver. It is this environment that the Chinese and the Russians and the Indians and the Saudis, they understand what we're doing, and they are using this suppression against us by standing for massive, massive, massive delivery. And we see that continuously. So this game ends, and it ends badly. It was done for something called Gibson's paradox. Gibson's paradox is the inverse relationship, in essence, between real interest rates and the price of gold. And if you are going to maintain an environment of very low interest rates, see, it's the interest rates, it's not the gold manipulation, Danny, that matters. It's the interest rate manipulation that we've seen for 20 years, where suppressed interest rates have created an illusion of prosperity, where your home prices, your stock prices, your 401k, everything went higher in value. And that's another big problem, by the way, for the commercial real estate industry, where all these buildings were purchased at the lowest interest rates in American history. And now that rates are moving higher, on the long end, what does that mean for these values? And that's another big issue. But the bottom line is that for 20 years, we suppressed interest rates. By suppressing interest rates, we created this perception or this illusion of prosperity. And so if you have suppressed interest rates, why then you have to step on the price of gold. Because by stepping on the price of gold, it signals strength in the underlying currency, strength in the bond market, as illusionary as it would be. Because if you are going to have nothing in the way of interest rates, of zero on the federal funds rate for all of those years, then there's no opportunity cost in buying gold and silver. And that's one of the reasons why they would step on it, to promote an illusion of strength in the bond market and in the dollar market. And what it really is it's a barometer on the health of the system. The higher the price of gold and silver goes, it shows the flaws and the fragility in the underlying markets. And I think that's kind of the problem, is that these commercial banks have done this for so long, created such massive short positions that they're trying to slowly, I think, extricate themselves from these very, very large short positions, some of the largest in the history of the COMEX market. This is the COMEX market. This is a presentation I gave at Rick Rule's conference recently. And these are all the commodities that you see. These are commodities traded down here on the COMEX. This is, the red line are the top 4 banks, big commercial banks, and the green is the top 8 combined. This is the short position in silver. The largest concentrated short position in any commodity ever traded on the COMEX market by 8 banks. Look at oil over here. Corn, sugar, soybeans, cotton. Why would you have 8 banks that represent the largest concentrated short position in the history of the COMEX? Look at the top 4 shorts: silver, platinum, gold, palladium. Interesting. Why are they shorting the price of all of these metals? And that is the question that people need to understand. And so let's take a look at the next chart. This is how the rest of the world is using this against us. This is the amount of silver held in the LBMA. The rest of the world says, fine, you guys, now that we're wealthy enough and industrialized enough and coordinated enough, you guys want to short the hell out of the paper price? Go ahead. This is what we're going to do. We're going to stand for delivery and drain your exchanges. That's exactly what they are doing.
Yeah, it's next to nil now.
Suppression of the Western paper market against us. They know what we're doing, slowly draining the vaults.